Good morning, everyone, and welcome to the European crossover webinar. And FX continues to remain in a relatively tight range. We haven't moved a whole lot. We've kind of bounced around yesterday in the euro, but we're still stuck overall in a relatively tight range. We did go in and see the cable go on and make a move a little bit higher. See right here. Still continue just to push up, but we did go and come close to challenging that key 26 area, but we haven't been able to get past it. As I mentioned, looking at the euro, we've just kind of bounced in within a range. But when you look overall, let me see here, we just haven't moved. I mean, if you look over the past couple of 2 or 3 weeks, when we were really bouncing around in ranges, you can see here. And then we took off from the 109 area. I should have to push back about 5 or 6 weeks ago, but you can see here, look at these moves. They were just, just running from essentially 109 up here to 1337, a pair, just a gentle pair back, another run up here, and then a fall back to just under 112. And then now we're just trading a, fairly tight range as the market tries to figure out what it wants to do. Same thing here with the dollar index, just in a very, very tight range. So we haven't really seen that much of a movement in FX as far as moving or bumping out of these ranges. They've been confined is probably a better word for just confined within a tighter area. We did get dollar CAD move a little bit higher, but you can see even here, despite if you look on a little bit closer basis, it was like, wow, they finally, they got up above 136. But if you look overall, the same thing you're seeing here. Look at this. I don't expect it to be in these huge moves that we saw here before. But even here, as we were dropping from the 138 area here, saw a near relentless move down here to 133, and then a quick jump back to 136 as we bounced around. And now look how tight the range has gotten over the last week as the market tries to figure out what it wants to do. And dollar yen, we got a little bit of a fake out the other day as we made a run up in here towards 108, only to come right back. And once again, you can barely even notice it here because of how restrictive the movements have been over the last week or so. Look at that. You have to actually zoom in on this to get a little bit closer look and say, oh, yeah, we did go on to make a run up here towards 108. We came right back, made another run yesterday, going up towards there, even took out the highs, a little bit lower than what our bias chart was, resistance. Came back again, and we're just in a very tight range. You can see here, we're just not moving very much here with FX. But as I mentioned, the indexes have been a catalyst in this move. Taking a look at the calendar on the day, there is just no activity whatsoever, at least here in the European session. And actually, even for today, look at that, here in the US session, no data whatsoever. Tomorrow we do get German exports. Mexican inflation, once again, that's tomorrow. With here in the States, jobless claims. Then on Friday, we do get final PPI along with Mexican industrial output. and Canadian jobs. So not a whole lot of data, with the exception of, which is a bigger one, which is going to be the Canadian jobs. We do have some wholesale sales tomorrow at 10 a.m. Eastern, but with the exception of Canadian jobs, because we do have PPI, but that's final demand here in the States on Friday. With the exception of Canadian employment, really not a whole lot to hang your hat on. And tomorrow we have German export. That is it. And looking as far as news, the Australian dollar stalls as coronavirus forces city lockdown. The Australian dollar went flat on Wednesday as investors fretted about the economic damage a coronavirus lockdown in Melbourne might do to the national recovery. The Aussie steadied at 69.41 after pulling back from a near 4-week high of 69.98. As surging COVID-19 cases globally turned the mood cautious. New Zealand dollar likewise paused at 65.41. Analysts said that the new lockdown of Melbourne, a city of 5 million in Australia's second biggest state of Victoria, was a setback to what had been a solid economic rebound. Westpac chief economist Bill Evans trimmed his estimate of economic growth to 1.1% for the September quarter, down from 1.5% previously. The unknown variable will be the impact on national confidence of the unexpected developments, said Evans. The events in Melbourne highlight the risks around the containment of the virus. Other shutdowns, the inevitable salvage loss in confidence, were that to concur. Analysts said CBA noted Victoria accounted for roughly 24% of the country's annual economic output. An estimated 6-week lockdown of its capital city could shave as much as a 1 percentage point from third quarter GDP. The governors flagged that further fiscal stimulus will likely be needed beyond the initial cutoff date of in September, and even hinted at bringing forward the large-scale tax cuts to boost spending. Such a shift would add to already record borrowing needs and put the upward pressure on bond yields, which in turn could draw a public policy response from the RBA. Just Tuesday, the central bank reiterated it would do whatever was necessary to keep the 3-year bond yields down a quarter basis point and the debt market functioning properly. S&P Global Ratings warned events in Melbourne could endanger Victoria's AAA credit rating should the economic disruption last longer than currently expected. We expect weaker revenues, including payroll taxes, stamp duties, and goods and services taxes, and increased support and health expenditures, the agency said. The negative outlook on our rating on the state reflects that the Victoria's fiscal repair could be delayed. And on to the dollar. So the dollar holds advantage as coronavirus fears weigh on markets. The dollar held on to gains on Wednesday as the resurgence of the coronavirus in the United States and the return of the lockdowns in some countries boosted safe haven demand for the U.S. currency. Risk sentiment was also undermined after the Federal Reserve officials expressed concern that the rising coronavirus cases could harm economic growth just as stimulus measures start to expire. The yuan fell slightly against the dollar, halting a 2-day rally after Chinese central bank's daily midpoint for the currency was set for a weaker than expected level. Other Asian currencies straddled near ranges as a resurgence of coronavirus cases threatened a return of lockdown restrictions. The mood changes day by day, but the dollar looks to be supported for now as investors turn more cautious about the virus, said Yuki Shizuki. The Fed's comments on the economy sound somber. There's reason to worry because it's hard to see when the virus will be brought under control. The dollar traded at 107.5 yen against the euro. The dollar was quoted 12.78, and the greenback bought 94.28 Swiss francs. Sterling changed hands at 25.54. The pound was near three-week highs as traders awaited French Finance Minister Rishi Sunak's announcement later on Wednesday of the next moves to prevent a wave of job cuts as damaging already weakened economy. Equities weakened and U.S. Treasury yields edged lower as the number of confirmed cases as the United States pushed past 3 million on Tuesday. The United States has the highest known numbers of coronavirus cases and deaths in the world. Adding to the cautious tone, the Fed officials expressed concern that the surge in infection threatens to pitch consumer spending and job gains as some stimulus programs are set to expire. One Fed policymaker pledged more support ahead from the U.S. Central Bank. Some traders warned the dollar could break out of its range against the yen because of currency options are set to expire later Wednesday and Thursday. While China's industrial output has recovered faster than other countries, further expansion will be hard to attain without stronger, broad-based demand and a turnaround in exports. The Aussie dollar with little change at 69.39, found a 0.4 decline on Tuesday. Sentiment for the Aussie has taken a hit after coronavirus lockdown measures were reimposed in Australia's second biggest city of Melbourne on Tuesday. With that, we'll go on and move into the analysis. Like I said, it's relatively quiet. Take a look what we've stood here in the indices. You can see here in the NASDAQ, we've had quite the run. We've been pretty stretched, but we actually have yesterday broken a fairly steep trend line here on the 2-hour chart. We did go and run out of gas right around 10,700. Take a look at the SPOOs. Similar dynamic. And let's go and move into the analysis. And we actually have the morning bid, so we'll go over that quickly before we start into the analysis. So we have a dearth of activity today as far as economic activity, so might as well take a look at that. And we haven't moved that much in FX, so share markets are wavering after snapping a 5-day winning streak on Tuesday when world stock markets tumbled 1% and on all three U.S. indexes. The morning Wall Street futures and European equities are both lower. Treasury yields are close to 1-week lows. They plunged on Tuesday, and German yields are 2 basis points lower. China's Shanghai and Shenzhen benchmarks continue to march higher. It's widely seen as a state-sanctioned rally. In keeping with the jittery mood, the dollar is holding firm, as is gold. The most obvious explanation for the pullback is the rise in U.S. coronavirus cases, with 3 million confirmed cases and localized activity restrictions. Atlanta Fed President Bostic said there was still a real sense that the coronavirus case might go on longer than we had previously planned for. Criticism of Trump's handling of the crisis is seen damaging his re-election chances, forcing Wall Street to contend with the possibility of a Democratic administration, higher taxes, and tighter regulation. Markets also may be hankering after another dose of stimulus. Fed Chair Richard Clarida said that there was no limit to how much the bond buying the Fed could do. Cleveland's Fed Loretta Mester, meanwhile, called for more help for the fiscal side. She may have hit the nail on the head. There's some unease as the scheme to supplement U.S. jobless payments expires at the end of July as the COVID spike threatens to derail new hiring. Consultancy Oxford Economics points out the worsening coronavirus comes as just as liquidity provisions for the central bank and government is slowing. Barclays said this morning in its annual equity gilt study that while all the extra borrowing is needed, deficits will need to be addressed someday with higher taxes, part of the solution. Speaking of fiscal stimulus, British Finance Minister Rishi Sunak is expected to announce measures to counter the jump in unemployment, aside from spending £3 billion to improve energy efficiency. He could announce value-added tax cuts, lower property purchases, and taxes and vouchers to aid hospitality businesses. The pound is holding near 3-week highs before his speech. And with that, we'll go and move on to the analysis. As I said, movements have been relatively restrained. I mean, you can see here forget this big move, but we were seeing some pretty decent moves here before we took off from 109 all the way up here to, almost close to, well, right at 114. Then pairing back to just under 112, and then a bounce back up, and now it's stuck in a very, very tight range here at this point. Kind of bounced a little bit, but even today, look how tight the range is today. We're talking, 1262 to 1296. So basically trading a 35 pip trading range, or less than even that at this point. So we're just not really going anywhere, basically spinning our tires. The euro marked time on Tuesday within its range. Support will be 1235 with resistance at 1337. So we're trading even tighter in the range at this point. So but the resistance will remain the same here. And as we were saying here, it's just basically marking time. As most other FX are, like I said, the cable's pushing a little bit higher, but has not been able to take out that key 2602. We've addressed that 2602. If you look back here, it goes way back. There's a significance right there. It was 2602, going back to November of last year. So cable pressed the upside, but was unable to get past weekly level 2602, which will be resistance for Wednesday. Support will be 2437. Bit of a dip down here, but as I said, we could easily come back here. They're expecting that speech. We could easily come back here and not, violate anything, as far as support. So we'd have to dip, down here before we run into anything. So once again, resistance, although it's a bit of ways away, is going to be key, which is going to be 2602. In the meantime, we may dawdle around in these ranges. We'll move into the Aussie dollar. Look, the Aussie dollar still remains way up here in the stratosphere. I mean, this chart exemplifies where we're at this point. I mean, to the extent, down here, obviously this is an extreme, but we're way up here in the stratosphere. Even though despite a lockdown in Melbourne, Second largest city, 5 million people. Look at that. We are just still up here, way up here in the clouds. It's probably got to be frustrating for anybody that's short to think, God, even U.S. equities pared back, and we're still holding way up here. So the Aussie pared back slightly. Slightly is the key word here. Post RBA. Resistance will be 69.97 with support of 68.87. We're just, look at that. We are just still staying firm. But that will boom into the Kiwi. Kiwi posted a doji on Tuesday, suggesting the move may be stalling. Upside resistance remains 65.94. Go. See it up in here. With support at 64.93. Moving on to the dollar CAD. The dollar CAD closed at its best level in 5 days. You see here when we took off here, and still restrained, but for the dollar CAD it was a decent little move. The pair needs to close above 36.29. You can see that right there to make a stake for a short-term bottom. Resistance beyond that would be 36.81. But you can see here we did make a run up in here in Asia, or relatively soon here was 30. Looks like 36.21. The resistance is 36.29 with support at 35.20. So we can get a close above 36.29. That will signify a short-term bottom. So the dollar peso saw a solid close on Tuesday up to the 22.85 area here. You can see that right there. Close right on the nose. Immediate resistance will be 23.07, and that's the close right there. With followed by 23.28. You can see that back here. With support at 22.48. And no change here in the dollar yen. You can see here we are just, look at that, back to back, almost identical patterns. I mean, we just stretched the low by about, let me see, we stretched the low by about 4 ticks or 4 pips, and we stretched the high about maybe 2 or 3 pips. But these are almost identical. And look here, we're even tighter range now. So no changes in here whatsoever in dollar yen. Upside 791, which has capped these two rallies here, and on the downside 708. And we've stayed in the 20s right now. No changes. As I mentioned, we're just very quiet here in FX overall. Just have not been able to break out of range. And the same thing holds true with the dollar index. When we saw the potential for it to break going into yesterday, but we didn't press any further. And we're just stuck here, and the market's just not sure what it wants to do at this point. So no changes here in the cash dollar index. Downside 96.23 for support. Upside 97.22. And it's just like FX. I mean, we're just trapped in this range, and we're basically going to have to get a close on either side to break us out of this range. Whether you're talking euro, dollar CAD. I mean, we have seen the cable press higher here. And Aussie and Kiwi continue to remain strong, but on some of these other pairs, we're just going to have to move higher here or lower to finally get us, making a move. With that, we'll go and move on to the cross rates. Looking at the Kiwi yen, this doesn't surprise me at all. You can see here, we're just stuck dead in the water. It doesn't surprise me because the Kiwi, that's not paring back. The dollar yen, I mean, the yen itself isn't doing much of anything. So we are just getting tighter and tighter and tighter. So no changes whatsoever here with Kiwi yen. 70.52 on the upside, 69.30 on the downside. But we're just stuck in here. And you can see here with the euro yen, we gave a little bit of room for up here to 21.82 after we got past, but we never could close beyond 21.51. Give a little bit of extra room on the upside, but it's not doing anything. So no changes here, and on the downside, 20.75. So I'm just saying, as I said, we're just so tight in FX. We're tight as a drum, and we're just not really unable to go either way. Let's take a look at the euro odd. Surprise, surprise, look at this. The range keeps getting tighter. And you look on here, look how tight that is. So no change here in euro odd. 62.68 on the upside, 61.48 on the downside. And moving on to the euro kiwi. Well, look at that too. So it's almost comical. We are just not. I mean, we're not moving. We're not moving whatsoever. 72.80 on the downside, 71. I mean, on the upside, uh, 72, 71.87 on the downside, and we're just not moving here. Look at this. Moving on to the Aussie. Boy, you gotta wonder what's going to break these out of the ranges. Holy smokes! Look at this. Well, no change here. You can see 74.97 is capping this, but capping it. But then again, we're not moving. So, and on the downside, 73.68. Let's go and move into the guppy. We were able to press up a little bit higher here in the guppy. We had resistance at 35.29, which you capped, and the high yesterday's high was 35.42, although we closed at 34.83. I still like the 35.29, and going into today, that was from yesterday to roll today is 35. The high so far is 35.33. I still like this 35.29, so there's no need to change it, and we're at 34.80. And on the downside, 33.35. We would need that break to really get some gusto going. 33.35. So no changes there here in the guppy. Once again, 35.29 seems to be doing a pretty good job of capping this. High yesterday was 42. High today is 30. So right on there. And we're moving to the sterling odd. Moving on to the sterling odd. Trying to press up a little bit higher here. Why you just want to go with the technicals here. Look at that. Ran out of gas right at that 81.06. We kept it pretty tight though at 80.43. So we'll move it up because we've been restrictive for so long. This almost seemed like a stretch, but you can see right there why I like to go with the touches here. Right there at 81.06. They ran out of gas just a hair before there. So it's going to be 81.06. The only thing that we're changing today. And we can take a look at the 2 hours so we can get a little bit closer look. Right there will be support, 79.65. 79.64. And that's going to do it for FX. And you can see we're just trading in a very, very tight range. We can take a look and see what gold's doing. Wow, look at that. Above $1,800. We are still trudging along here. Continue to press higher here in gold with no let up. It's just a quick little pop up here in Euro just now. And a little bit of volume coming in. But other than that, like I said, relatively quiet session. We are seeing the NASDAQ come back a little bit. We'll wrap up on that. You can see here, we'll press up here on the NASDAQ. Get a little bit of a run up in here. But other than that, that'll be it for the day. And thanks for joining us here on the European Crossover webinar. I'll get the bias chart posted in the room.